I think at this point, it's safe to say that the curve for the coronavirus and the Delta variant has flattened, and you might even argue that it's starting to decrease. This is the world tracker on COVID cases or new cases, and this is the US tracker. Essentially, it's flattened and starting to go the opposite direction. With the summer months still in play, I think we can pretty much safe to say that the opening will resume and continue. So that is good for, I guess, the a movement higher in the general market, and that being the Nasdaq, the SPY, as well as the financials, the XLF, and also the Dow Jones. So what my expectation for the QQQ and the SPY is you're gonna see what we call a capitulation top. And the last capitulation top, I believe, occurred right here. So that would be during that coronavirus run up. So here's a capitulation top, but I think it's gonna be more like this, where it'll be, and this is I think a week. So all it may take a week and a half. So at best case, I think, next week and then Wednesday of the week after. So that would put the target to be next week, and then maybe September 8th is when. Now it could be earlier, right? It could be anywhere from, I guess, any time within this time frame. It could be earlier. You gotta watch it and see when actually the capitulation top occur. It'll be a signature like this, where it's an explosive movement higher. So you see an explosive movement higher, followed by some sort of a retracts, an explosive movement higher, followed by like it'll look like an end of day high, where it really looks like it's closing and exploding toward the high of the day. And then maybe the last 30 minutes or the last hour, you see a minor retractment. And that minor retractment essentially creates a tail, a little bit of a tail. And that little bit of a tail is all it would take to trigger the algorithms and the hedge funds and the futures, right? The people who are trading the future market, they will see this signature as a capitulation top, and you will have a gap down with no more shorts to cover. There will be no more, I guess, reason to explode it higher because all the shorts has essentially capitulated, and that's what that mean by capitulation top. And then you get a massive correction. So look for this type of candle essentially, where it's a an explosive movement higher with increasing volume, and then the next day you have a huge sell-off day as a retracement. So for the week, this coming week, maybe a week and a half, I would say the best and the safest stock to play would probably be the opening stocks, the stocks that are showing. I mean, the stock that will respond to a reopening of the world economy, but also going back to traveling and stay away from the stay-at-home stocks and the likes of stocks that have profited during the coronavirus. Those would get profit taking as well as shorts. Shorts will enter those. So stocks like Zooms and Peloton and some of the camping stocks and all of the stay-at-home stocks might be depressed or take a retracement. Stocks that are depressed right now that have the potential to go up would be stuff like Norwegian Cruise Line is a good one to profit. A safe one too, because even if it goes down, you can hold this one in a 401k. So I would be adding to Norwegian Cruise Line on my 401k. I would be adding like Carnival Cruise, maybe even Royal Cruise Line, which I don't particularly like. I probably won't do this one, but the previous Norwegian Cruise Line and Caribbean Cruise Line, and of course the flight or the flight booking stocks like TripAdvisor, Expedia, those stocks. Now booking has already gone up too high. Um, so I might be selling. At this point, it may stay stable. I mean, the thing is, booking has so much shorts in it that you get the squeeze, and so it's over. It has already achieved the target. So if I were to play booking, I would be doing a straddle sell, meaning I would sell one put and one call option dated out at least 3 weeks so that it'll have time to wiggle around. But the thing is, this has so much shorts that the potential for it to go up to 2500 is actually pretty good. So that play is actually type kind of risky. But um, as far as just purchases on the 401k, Expedia, TripAdvisor, those are good. Um, Whoops, what is this? I thought it should be the weekly. Let me go 6 months and change it back to the weekly chart. I think it was custom was what it was. Apply. Yeah. So I would stay with TripAdvisor and the likes, which is really, let me go 3 years. Um, which is essentially at a technical level, and you can see it can reach 40. I mean, it has a chance to go toward this range. So that's where I would be going. Let me do a 2 year kind of thing. So change this to 9. Apply. Okay. The other opportunity would be um the meme stocks like game. So looks like a squeeze is in order. And why would a squeeze be in order for these meme stocks? Because you have a favoring situation with the stock markets poised to go higher. Now this squeeze, the only thing about this squeeze is that if game, for example, if game and AMC and I think the other one is Express or actually this guy BlackBerry and also Bath and Beyond, um, and I forget the other one like Express Gene or something like that, EXPR maybe. So these meme stocks, if they do achieve the squeeze that the Wall Street bets are trying to encourage, that would also achieve the capitulation top because the higher these stocks go, the more the more contingency, or not, the word I'm choosing is the more risk that it places on the stock market, essentially because you got hedge funds that needs to liquidate to meet the demands of the short squeeze. So what those hedge funds or those managers, they would have to sell stocks to have the margin requirements, but also the liquidity, and the funds to continue to manipulate these type of stocks, the meme stocks, back lower. So they need to sell all their profitable positions, any position that they have made gains. So when the algorithm detects that, as you get the squeeze going on, or the capitulation top going on, when the algorithm detects large amount of block sales, of stocks that are high flying or outperforming, and the overall general market the ETF starts to go down because of the selling, due to game and the meme stocks. That's maybe the point of the capitulation top. So that looks like the overall condition where, you see the game and the AMC and the Beth Bath Beyond and the BlackBerry. Those stocks starts to get the squeeze, and at a certain point, it's gonna force the market, the general market, to start to sell off, because the risk aversity on the market is high, or at least the hedge funds, they need to sell off on those stocks. And so you get a whole overall general retracement of the entire market, and also the meme stocks. So that's when you get, retracement in game. I don't think game can achieve this type of I guess squeeze. This squeeze, it can happen, but not right now. This is too soon. Same with AMC, I would think. So AMC, I don't think it can get to that type of squeeze level. I think it can easily achieve a squeeze level to 50, break the 50, and somewhere around here is where it would be a target, to sell. So that being said, any the other high flying stocks that may be of interest is like Tesla. And you can say, well, Tesla looks like, it's dead in the water kind of thing. But again, if Tesla break this, intermediate high, the next target is gonna be 720, 730, so to speak. So I would look to buy above this level for a intermediate target. Now, if it doesn't break it, then it's not gonna happen. But if it does break it, then that's where it would go to on Tesla. I would stay away from Google and any of the China stock like BABA, mRNA. I would stay away. I mean, if I play mRNA, it would be a straddle, because you can see at this point it looks to be pretty stable. Unfortunately, there's a chance of it to collapse due to the reopening. So there's a chance of that. It's not a high chance, but there's still a chance. And on a risk averse or a risk reward, strategy account, I don't know if that's the best option, but if I do play it, it would be a short term, maybe 1 day, 2 day, 3 days at most, on a sale of a call and a sale of a put. So a sale of a straddle, if it gets to this 60-minute line, which is the midpoint. So somewhere above this 60-minute line, I would probably look for a type of a push higher toward this, and then I would sell one call and one puts, for a sale of a straddle to profit on the deterioration. As this wiggle and stay, overall, as the wiggle and stay, the puts and the call will or the intrinsic value will decrease, and that would be a safe bet. I would stay away from Nvidia. Netflix is a stay-at-home stock. It looks powerful. There looks like a short squeeze going on with this one. So even though it looks like a top, again, it could get to a capitulation top. And I wouldn't want to be playing anything that, looks like a top but may not be a top. Just not the safest play. IP now this is probably a stock. Now I do have a straddle sale on this one, a Shopify. So Shopify is another looks to be pretty stable at this point, even on a breakout on a capitulation top. I don't think it's gonna break out, but it's still probably more. It is a stay-at-home stock, so to speak, but it's also a reopening stock. So it probably, even on a breakout of the market, Shopify would stay in this range, so to speak. So I do have one straddle on it, meaning I sold one call and one put. And I probably won't add to it just because just don't want to overload on one single strategy. Um, a stock like Wilco looks like technically it looks good, right? Technically, you can see right here it's bouncing from the 200-day moving average, but it is a stay-at-home stock, so I would say it probably would just consolidate here. And of course, when the market correct as it gets to that capitulation top, it's gonna break this 200. So this is a deception as far as looking. It looks like a favorable stock and a potential movement higher, but that's a classic head fake due to the condition. IPO stocks are always something where um, would be a good buy. So we can look at some of the IPOs and see where some might be favorable. And I would just look at the 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 weekly trend and see if there's anything here. Uh, IPO stocks, always a doing a favorable condition. Always looks like, especially the one that I guess the hot IPOs always looks like a safe bet for a intermediate type of jump toward I guess, people can short it at the beginning and then it actually gets a squeeze. So you can see all of these stocks or all these IPOs. Dash is not probably not going to do anything because this is considered a stay-at-home stock as well. Roblox already had its movement higher. Um, UPath at 33 billion looks to be something, looks like this one probably looks pretty good. I would think this has the condition. This is a very favorable technical setup. You can see increasing volume, breaking out of the 50. So I would be not adding, I would be buying a position in UPath. Actually, it's UE Path for my 401k. Robinhood, this probably is a good one as well, even though it looks depressed. The opportunity for it to go up, it may take a while though, you know what I mean? So it does look good. It looks like something you can hold even, but if you are short in liquidity and you just want to make money during this capitulation run up, I don't know if Robinhood is gonna be the right stock to capitalize on that. Same with Airbnb. Actually, Airbnb is a reopening stock, so it does look like a potential to go higher. So Airbnb actually looks pretty good. Look at that. Weekly, ending above the 20. Baseline has been set, so I will be buying a position in Airbnb. Let me see what you upstart. No, that's too high. Squarespace, 4 billion. The volume is too low, so I won't be buying that one. We need higher volume. Um, and you got the China stock like Coupang. I don't know, 52 billions. Yeah, True Simple already rally. I wish it would be down here. May or may not. I think this is also a China stock. So, let me see. Frog. Yeah, I mean that's a potential there. These type of stocks, I mean, it looks bad. You know what I mean? So I don't know if I would buy that one. It looks bad, but the potential is there. Um, you know, big C, big commerce, decent volume enough, 4.2 billion. Looks depressed. I think an opportunity to get this toward this 50 is there. So big C looks decent. Lemonade, 1 million, 4.6 billion. Looks like it's a decent one to get to this level as well. Sumo. Again, these stocks looks like there's opportunity. These aren't, what I would be the more favorable position I went through at the beginning. And a stable stock would be Boeing. I didn't even look up. I forgot about Boeing, but this would be a stable stock. Look at that. It's pretty much building a baseline. I think along with Norwegian Cruise Line, Carnival Cruise Line, I would be buying Boeing, and you might also go with the material stocks like the silver stocks looks good. Here you got a baseline on the 200-day moving average on Pan America. You got Neomont Mining. Again, a baseline on or a bounce off of the 50. So those stocks looks good as well. You can also go with the oil stocks like Valero, I believe. Yeah, that I will probably buy a position on Valero, and there are probably other opportunities. I'm just not gonna look. For now, this is probably enough for a decent analysis of what is to come next week.